Good afternoon. I'm Teresa Hinton, Chief Operating Officer at the NJCPA, and welcome to Issues Watch. I'm joined today by Ralph Thomas, CEO and Executive Director of the NJCPA. Welcome, Ralph.
Thank you, Teresa.
I'm also joined by current NJCPA President Alan Sobel, Managing Member of Sobel & Co. in Livingston, New Jersey. Hi, Alan.
Hi, Teresa. Good afternoon.
We're very fortunate today to have one of our member benefit providers, QuickFee, sponsoring today's program. Here's a brief message from Richard Formo of QuickFee.
Hi, I'm Richard Formo, the Chief Revenue Officer of QuickFee. All of us here at QuickFee are extremely proud to participate as a sponsor for this event, and we hope it is of great value. As the only financial technology company with over 30% of the IPA top 400 accounting firms already utilizing our online payment solution, I'm excited to officially announce that QuickFee is also the very first ever to offer clients of accounting firms interest-free payment plans while fully funding your firm with no credit check and zero recourse to the firm. Please visit our website at quickfee.com or email me directly at richard@quickfee.com. Thank you.
Thanks again to QuickFee for their ongoing support of the Society. As a special benefit, NJCPA members signing on with QuickFee will receive their first 3 months free. If you have a colleague who wasn't able to attend today's program, we'll be rebroadcasting this presentation on October 5th and 7th. If you have any questions during the broadcast, you can enter them in the questions box on your screen. We will try to address questions submitted during the live presentation throughout the program. Questions submitted during the replays will be answered via email. Today, we will be covering many New Jersey issues, including the state's new budget, the upcoming election, state tax updates, and the outlook for New Jersey businesses. We will also discuss a number of national issues, trends and regulations impacting the profession, and then provide updates on some key NJCPA programs, services, and initiatives. Since this is our first broadcast together, we have to mention COVID-19. We're 6 months into the pandemic and a lot has changed. How we work, how we shop, and how we socialize. The NJCPA has responded and adapted to this challenge, but we'll delve into that a bit later in the broadcast. In New Jersey, the state's businesses and NJCPA members have also had to adapt. The state is, of course, still in the process of reopening, and much of what we'll be discussing today relates to the pandemic. One of the top issues for our members and all New Jerseyans is the state budget. Alan, can you provide us with some details?
I sure can, Teresa. And first of all, it's great to be with everybody today, and I hope that you all are remaining safe and good well-being. And just know that the CPA Society is here to help you in any way that we possibly can, and we appreciate your membership. So on September 29th, which was just yesterday, the Governor Murphy signed a $32.7 billion budget for New Jersey, which is an abbreviated 2021 fiscal year. The budget includes an expansion of top individual tax rates, the top individual tax rate to 10.75% for incomes over $1 million. Prior to this, as most of you know, the rate applied to incomes only over $5 million. Now, in a recent survey of our membership, 64% of our members opposed the millionaire's tax. Now, in a compromise, however, to expand the millionaire's tax, a rebate program for low and middle income taxpayers was also approved. Rebates of up to $500 will be sent starting next July to single parent households with no more than $75,000 in gross income and at least one dependent child, and two-parent households with less than $150,000 in gross income and at least one dependent child. Now, as it relates to the millionaire's tax, that will raise, it's expected to raise approximately $350 million for our state treasury. And the rebate program, which will be into next fiscal year, will also cost $350 million approximately based upon estimates. The budget also extends by 4 years the 2.5% surtax on corporations with more than $1 million in income, giving New Jersey the highest CBT rate in the country at 11.5%. I don't think that's something that we're all particularly proud of about New Jersey. There's also an increase on the assessment on HMO plans from 3% to 5%. Together, all of these tax increases are expected to bring in about $700 million over the next fiscal year. Now, to help further address the pandemic-related revenue deficit, the budget also includes a $4.5 billion in borrowing, which has been authorized by a 4-member panel of lawmakers. This is even more than what the governor included in his budget proposal. In that same recent survey that I alluded to before, 63% of our members are opposed to the governor's borrowing plan. When it comes to spending, there's a 3.5% increase in the government spending over the previous year's budget. The budget includes $4.7 billion payment, a $4.7 billion payment to the Public Worker Pension Fund and a $2.5 billion surplus. Now, on the bright side, the budget did restore the funding of 2 property tax relief programs. $275 million has been allocated for the homestead credit and $220 million for the senior freeze. The next episode of Issues Watch podcast will break down the budget in detail. So listen online at njcpa.org/podcast or in your favorite podcast app.
Thanks, Alan. That's a lot of good information, and I look forward to learning more during the podcast. COVID-19 has also had an impact on state agencies. Ralph, can you share with us what's been happening at the State Board of Accountancy?
Sure, Teresa, and to our members out there. Due to the pandemic, the New Jersey State Board of Accountancy has had about a 50% decline and reduction in its staff. And as a result of that, the licensing processing has slowed down. It's currently taking 2 to 3 months for the state police to do background checks, and then another 2 to 3 months for state board processing. So we've been getting a lot of calls from members about, not hearing anything from the board. So I want them to be at ease that don't worry, things are being done. I will want to also alert that don't try to call the board because they are working, their staff are working remotely, and so they're not answering phones. The best way to contact them is to contact them using email. And so it's, I know that members are also concerned about whether there's going to be an extension for the CPE period. Hi, Ralph here, breaking into the Issues Watch replay with an important update. After this broadcast initially aired, we received an important update for CPA licensees and CPA exam candidates. So I'd like to share that with you now. On October 2nd, the New Jersey Division of Consumer Affairs, which is the state agency that oversees the New Jersey State Board of Accountancy, issued a rule waiver that provides 2 pandemic-related deadline extensions. First, CPA exam credits that expire between March 9th and December 30, 2020 have been automatically extended to December 31st, 2020. Second, the deadline for CPAs and public accountants to complete their 120 credit hours for the current triennial has been extended from December 31st, 2020 to June 30th, 2021. While the additional 6 months is available for those who need it, here at the NJCPA, we urge all New Jersey CPAs to attempt to complete their CPA requirement by the original date of December 31st, 2020 deadline, if at all possible. It will make your record keeping a whole lot easier since credits taken in the first 6 months of 2021 that are applied to the 2018-20 triennial cannot be counted for the 2021 to 2023 triennial. Also, it is our understanding that license renewal forms will still be due December 31st, 2020. At this time, it is unclear what the process will be for licensees to indicate their CPE completion status. As additional guidance becomes available, we'll share it with you. In the meantime, you can search for and register for hundreds of webinars, webcast@njcpa.org/events. And be sure to use our CPE tracker to keep track of your credits. The tracker is available at njcpa.org/CP tracker. And if you have questions for the State Board, we've been told the best way to get in touch with them is via email, not phone. Their address is displayed on your screen. And that's an update on what's happening at the State Board. I would say too that if individuals are having a tough time contacting the board, give us a call here at the Society and see if we can help resolve any of the issues and concerns that you may have.
Thanks, Ralph. Our next topic is New Jersey taxes. Alan, I know we received some clarification from the Division of Taxation on the pass-through tax, a topic you're very familiar with. Can you update our members on that topic and as well as other New Jersey tax news?
Of course, Teresa, thank you. And so I will start with the pass-through legislation, the business alternative income tax. And so first of all, we've been getting a lot of questions with regard to estimated tax payments and how to make them and what's going to happen since we're already past the third quarter estimate payment. The good news, and if you go to the New Jersey Division Tax website, you'll see that the New Jersey Division of Taxation has stated that they will not be assessing penalties on underpayment of taxes in the first year. It's based upon the notion of the prior year tax exception. So to the extent that you didn't pay taxes in the prior year, which nobody did because the tax didn't exist, there will be no penalty for underpayment of taxes in the current year. So that's a real benefit towards taxpayers and eases our burden as tax preparers and tax professionals of having to figure out how we're going to apply this to our clients. So that's good news. I'm also happy to report that the portal is now open on the division tax site so that you can begin to make payments if you choose to do so. And again, if you go to the division tax website, you'll see the ability to make those payments on the site. So that's a good thing. It was originally posted, there were some problems with it. They took it down and it's now back up and running. The division, the tax website also is planning to issue some FAQs. We should hear some information on that in the coming weeks. The election form itself is still under construction, but we're told it should be released by mid-October. We're optimistic and hopeful that may happen, but the history here is that things tend to get delayed. So if we don't hear by mid-October, don't panic. The election is not actually required until you file the tax return, the due date of the tax return, I should say. Let me clarify that. It's not when you file, it's on the original due date of the tax return, which would be March 15th. So we have some time to make that election. And it is a revocable election up until the date of the extension. So again, you have some time to figure this out. I wouldn't rush to doing something, but you definitely want to be planning for the debate at this particular time. In addition to which, all the subsequent forms will be rolled out over the next several months, such as the return itself, the revocation form, and the claim for refund, should there be a refund in place. I think that the thing that we as practitioners need to consider is the coordination of whether the BATE is going to make sense for our clients. It's beyond the scope of this program, and we hope the Society will be having some programming on this in the months ahead to help you work through those decisions. But the legislation itself is not all that complicated. It's the coordination with the gross income tax and the coordination of outside taxpayers that ultimately will lead to whether or not this makes sense for your clients or not. Again, we stand ready to answer your questions. You can use the community forum. We've been answering questions on there. You can feel to reach out directly to the staff, or of course you can email me directly and I'll try to provide you what other information I might have. So in other New Jersey tax news, the New Jersey Division of Taxation is waiving, this is good news, late filing penalties for corporations' business tax returns that are due on October 15th. Some filers received an extension to file their federal return and need slightly more time to file their New Jersey return. So the late filing penalty will be waived if the return is filed by November 16th, 2020. On September 28th, Governor Murphy signed legislation that excludes combat pay from New Jersey gross income tax. New Jersey was the only state having that was taxing combat pay in the first place. which is also untaxed on a federal level. So this is good news. New Jersey now is conforming with the rest of the country and not taxing our soldiers and others in the military that are receiving combat pay. Effective October 1st, there is a 9.3% increase in our per gallon, I should say, increase in our New Jersey gas tax. Now, keep in mind, this is not a new tax. It is something that was triggered as part of the compromise that was made in 2016 to eliminate and phase out the estate tax. And the way that it worked was there's a formula in place to ensure that the government receives approximately $2 billion a year in tax revenues from the in gas taxes to fund the Transportation Trust Fund. And because of the COVID pandemic, as you can imagine, utilization is way down. As a result of utilization of being down, the impact on that is the tax revenues are down. So the way the legislation was written back in 2016, these increases automatically kick in. And so you will see a 9.3% per gallon increase at the gas pump beginning October 1st. And hopefully, when things get back to normal, we'll see a drop in that at some future particular point in time so that we can get back in line with where things should be. You know, the tax increases, you know, are keep on coming. So there is an estimated $919 million deficit in the unemployment payroll taxes because of COVID. And this is going to increase our business payroll taxes in the coming year. So next July, due to an avalanche in pandemic-related unemployment claims, we as business owners and our clients are going to have to expect about a $919 million increase in order to build the unemployment trust fund back up itself again. Teresa, back to you.
What is your opinion on the HMO surcharge? That was a question that was asked by one of our viewers. They said, won't that just trickle down to the insurance premiums we pay? Ralph, you too. Do either of you have an opinion on this?
Well, so I'll take it first, Ralph. And, you know, anytime there's an increased cost, right, it's going to flow down. So yes, I would expect that to be the case. You know, I'm not a fan of any of these kinds of increases, but I do know that it was driven in part because there was some inequities between HMOs and other plans. And, you know, I don't really know enough about it to be able to offer a whole lot of comment, but just as a general business, you know, as a business person, I'm never in favor of increasing fees on things that ultimately get passed down to the consumer.
Yeah.
Yeah, I think Alan's covered this topic very well. It's just one of those, I call them anomalies that happen in a situation like this.
Okay, well, thank you both. Another big topic for our state is cannabis. New Jerseyans will be asked to vote on legalizing adult use cannabis when they cast their votes this November. Here to tell us more about that and next steps if it passes is NJCPA member Melissa Dardani, leader of our Cannabis Interest Group.
For those who haven't already heard, when we go to vote this November, there will be a ballot question which will ask whether we support or oppose a constitutional amendment to legalize cannabis for adult use, which means the sale, the cultivation, processing of cannabis in the state of New Jersey. If passed, it would take effect January 1st, 2021. And the Cannabis Regulatory Commission would be granted the authority to determine what the industry looks like. The only thing that we do know based on the text of the ballot question is that at a minimum, the normal New Jersey sales tax of 6.625% as of today, plus a local option of up to an additional 2% sales tax will be in effect. Now, the way that the text reads, it says that in addition to the standard New Jersey sales tax, cannabis may be subject to any other subsequent law of similar effect, talking about the Sales and Use Tax Act. So the Cannabis Regulatory Commission or the legislature may determine that additional sales taxes are to be imposed on the sale of cannabis, and it is their right to do so based on the text of the ballot question. So we really don't know what the sales tax will look like as of today. All we know is that it has been a big point of contention between the legislature and our governor to date. It is widely expected that this measure will pass in New Jersey based on the most recent poll conducted in July of 2020, which surveyed approximately 500 respondents who identified as likely voters. It is said that 67.6% of those respondents support the proposed ballot measure, which may not be surprising in a state like New Jersey. The NJCPA has released its own survey of our members who responded regarding the cannabis industry and what it might look like in practice. According to our survey, 66% of respondents believe that a commercial cannabis industry will help the New Jersey economy. And what might that help look like? It could be additional tax revenues from income tax, from sales tax. It might be out-of-state sales. New Jersey would be the first mid-Atlantic state to pass adult use cannabis, and therefore we might expect to see people coming in from out of town to participate in the market. We may see job creation, as would be the case with the beginning of any new industry. And we may see a lot of outside investment interested in New Jersey, and particularly in the New Jersey cannabis market. Now, to that point, 68% of our member respondents believe that measures should be taken to mitigate the impact of federal tax and banking regulations. The specific regulations that we're talking about are access to banking and payment processing for businesses, being that they operate in the cannabis space, which is still a federally illegal controlled substance. It has historically been and is still very difficult for state legal businesses to get access to banking and payment processing so that they can do business. And of course, then there is Internal Revenue Code Section 280E, which says, again, that if you are in the business of trafficking a Schedule 1 or Schedule 2 controlled substance per the text of the code section, you are barred from taking any ordinary and necessary business deductions. No payroll, no rent, no utilities. All you're allowed to take is your cost of goods sold. It is very costly for operators in the space, both from a compliance perspective, from an operations perspective, and then lastly, to be carrying the burden that 280E imposes. It is very, very expensive and very difficult to operate in the space. So what's next in New Jersey? As I said, when you go to vote in this year's election, you will see this question on your ballot. If it's passed, it takes effect January of 2021. Now, as I said, the Cannabis Regulatory Commission will be setting the rules and regulations. So once it takes effect, how long will it actually take before we know what those rules and regulations look like is still up in the air. We still do not know what the licensing process will look like, but we can look to what happened in the last licensing processes for medical licenses in New Jersey to maybe gain some insight. And what you can do as members is join the Cannabis Interest Group if you're interested in learning, discussing, sharing thoughts surrounding the subject. Be on the lookout. If and when this passes, there will be more webinars, CPE, and blog posts for educational purposes if you're interested in participating that way. And as always, feel free to reach out to us if you have any questions or would like to discuss or participate.
Thanks, Melissa. It will definitely be interesting to see how this plays out and the opportunities it can bring to CPAs looking to provide services to cannabis businesses. Before we go on to our next topic, we did get another question. Alan, do you really believe we will see a gas tax decrease once things begin to return to normal? Can't the governor decide to use these funds, taxes, to fill another hole?
So, Teresa, my understanding is that this was constitutionally written into the legislation that the proceeds from the gas tax have to be used for the Transportation Trust Fund. So I don't believe that the governor has the ability to be able to then, to keep the tax increased. I think it would require the legislators to vote on maintaining it and the governor to sign that. But if the formula is written such that there is approximately $2 billion a year that is raised. And to the extent that that's below, the tax goes up. To the extent it goes up, then the tax goes lower. So yes, could the legislation do something? Could the legislators create legislation? I guess that's a possibility, but not under the current framework of how the tax is working.
That's great. Thanks, Alan. When it comes to New Jersey businesses, we know so many of them have been struggling during the pandemic. Ralph and Alan, what are you seeing in regards to the outlook for our state's businesses?
Well, I'll jump in. According to a recent Rutgers report on the state's economy, New Jersey has regained nearly half the jobs it lost in March and April because of the shutdown. But we have now lost some momentum on those gains. New Jersey's total employment grew between 12% between April and August, and hopefully we will continue to see gains in that in the coming months. But one of the things that transpired during this whole pandemic situation was a delay in opening up businesses, and that has had a significant impact, particularly on the small business community. In particular, the shore area, for example, the inability of restaurants to be open and only initially for outside dining, and then limited to 25% inside dining when that was opened up, has caused a lot of those businesses to really struggle down there. And in some instances, small businesses didn't open up, particularly those that didn't have access to outside dining. So that's been a challenge, and one of the things that the society has done is we've become part of a business, the New Jersey Business Coalition, and it's a group of about 100 associations, nonprofits, and business groups that is advocating for safe reopening and more of the state's economy. We meet twice a week to have discussions about what's happening, and the group just doesn't meet. It presents white papers to the administration with suggestions of how things should be reopened, and challenging the administration to do its job in keeping New Jersey, bringing back New Jersey's economy. The coalition has fought against a new law recently signed by Governor Murphy that needlessly shifts COVID-19 costs to the workers' compensation system. This is going to put a tremendous burden on the compensation system. The law creates a presumption that all COVID-19 illnesses were contracted by employees on the job unless the employer can prove otherwise. These cases will overwhelm the workers' compensation fund and will lead to businesses having to pay more into the fund to bail it out. And I punt to Alan. Alan, what are you seeing amongst some of your clients at Sobel and Company?
Well, thanks, Ralph. And I think that what I'm seeing is probably what a lot of the people on this call are seeing with their clients. It's a mixed bag. There are some clients that are really adopting very well to this new environment. They're able to work in a remote situation. Their customer and their demands are still up. And then there are a lot of them that are suffering, very bad. So what I'm seeing, for example, is those in the food service industry, particularly related to the restaurants, are hurting big time. There's no way to survive a long term with the ability to only have 25% capacity. And that trickles down because those that are supplying them, the food purveyors who are supplying them with goods, are also hurting as well. Other service businesses like gyms and the like, even though they now have the ability to open up, they're opened up on such a restricted basis, it's very, very difficult. And then there are other businesses that are, like I said, they're coping very well, that they're doing well. We have manufacturing clients that are hitting numbers like they've never hit before. We don't know if that's because people are concerned about this next wave and there might be a shutdown, and so they're buying in advance in order to meet the demands and get through the pandemic, or whether there really is increased demand. It's not abundantly clear what's driving some of this. But again, many of our manufacturing clients are doing well. Transportation is doing well, particularly as we see that there's more deliveries, and the Amazons and people are buying online are good. Retail struggling a bit, with the exception maybe of the supermarket business, and that's a mixed bag as well. While they are seeing increased demand, they are also seeing increased costs. Payroll costs are up. The cost of making their stores clean and safe is also an increase, and people aren't buying what they used to buy. They what they call the center aisle, which is the commoditized goods, paper goods, and things like that have the lower margins. People are doing. But catering is not nearly what it once was because it just doesn't exist. Travel and hospitality businesses are also struggling as well. I think the biggest thing that we're seeing with our clients is uncertainty. So while we got through the first wave relatively well, we're now concerned about what may be coming next. And so clients are still making sure they have liquidity and strong liquidity to the best extent possible, are being prudent in the expenditures they're making, and we'll see what ultimately happens. I should add that a lot of their expenses are down. They're not spending as much on their own travel and entertainment that they once did. Supplies are down, things of that nature. So it's a mixed bag. We'll see what happens. And the last point I'll make, Ralph, you mentioned workers' compensation insurance and the burden that people are going to experience because they're pushing some of this COVID-related stuff to that. We're also seeing that the insurance markets in general are hardening. So clients are seeing significant increase in their overall insurance costs when renewal time comes. And that's, again, putting a burden on businesses that are already struggling. So that's kind of what we're seeing in our client base, what I'm seeing with the clients that I work with.
Yeah, I just, again, the coalition that the society is involved with has really been pushing the administration to, open up and the economy more and faster. So to our members out there, I would suggest if you have clients that are having challenges, encourage them to reach out to the administration, to write a letter indicating, the challenges that they're facing and the fact that they need to be able to open up. So that's one way to get the attention of the administration. It never hurts to communicate to the governor's office and let them know what's really happening out there. When we go as the state society, we're viewed as the trade association, but when constituents, people who vote, reach out to the legislators and the governor's office, it really makes a difference.
And Ralph, if I can just add, one thing to that. We do need to open up quicker in the state in a lot of ways, and this is not an easy thing at all. And I can't imagine what it's like to be the governor or other people that are in the situation. I know what it's like to be a business owner and having to make decisions for our own employees' safety. So this is not an easy thing. And, I don't think any of us can sit here and be critical, even though it may not be what's appropriate for our circumstances. My biggest issue here is that we have kind of this one-size-fits-all approach to this. And I think that there are a lot of responsible business owners out there who can find ways to create a safe environment for their customers and for their employees, and they should be encouraged to utilize those ways. And we should handle the people that don't take those right precautions, in the best possible way we can. By having one size fits all, we are definitely hurting our prospects of recovery here in New Jersey in a big way.
Alan, you hit the nail on the head on that, and that's what a lot of the discussion with the business coalition that we've been about is that New Jersey businesses shouldn't be penalized because of what has happened in California or other states, and that seems to be how the administration has reacted. If you recall earlier on in the year, the governor wanted to open up businesses and restaurants, and individuals went, and there was a 2 or 3 day period where individuals were going out, getting supplies and things. And then there was an issue out in California. And then all of a sudden he rescinded the executive order. So I totally agree with you that, we should be responsible in opening up. But I think the big concern with, again, our coalition is that we're slow to react. And also the lack of guidance from the administration on what are some of the goals and objectives that need to be met. As you know, the phase 2, phase 3 that, both New Jersey and New York are going through, businesses just don't know how to react if they don't know what are the goals, what has to be obtained. So that's again, one of the things that we've been pushing for in the coalition is to get, clarity and on those things to help so that businesses can be prepared to re-enter the marketplace.
And unfortunately, Ralph, the politicalization of this whole thing even makes it more difficult, right? Why can't we all just work together as a business community, as citizens of the state, as frankly, as citizens of this country, to help work together to solve this issue and protect our people while at the same time protecting our economy and all that's going on. There is a middle ground that can be achieved if we all work together on this. There's no doubt.
Absolutely, without a doubt.
Yeah, that was very well said, Alan. We do have another question. This comes regarding our cannabis topic. The question is that California has not reaped very much tax revenue from legal cannabis. If the proposal passes, what strategies will New Jersey use that differs from California? I don't know if either one of you want to field this, but right now the proposed taxes, I believe, are just the 6.25 sales tax with a option for the 2% local tax. But government will always have the right to levy other taxes like excise and those kind of taxes. So,
well, I think you're correct in that, Teresa, because one of the concerns that our members who are close to this issue, they're concerned of, again, the administration overtaxing cannabis
Right.
and layering on a surcharge because they see it as another opportunity to generate revenue. And if they take that position, then the cannabis industry may be at risk here in New Jersey of being successful because growers and cultivators won't want to be domiciled here. They'll go elsewhere. So those are the things that we have to be concerned about there. And I think too, the other big issue in the cannabis area is the 280E issue of getting that resolved so that, deductions for expenditures related to the growth and marketing of legalized cannabis will be a big thing here to be battled with and addressed in New Jersey.
Yeah, and
Thanks,
Teresa, if I can just add to that, I think that there is the direct revenues that New Jersey will receive as a result of this, but it's also the impact on the economy overall. So the notion here is this is a new emerging industry. It should create jobs, whether it's in the growing or the cultivation or the the prepared or then the ultimate retail sales. And I do think I agree with Ralph 100%. If we tax it at a level that it becomes so expensive that it's cheaper for people to go to the underground markets, then we've kind of shot ourselves in the foot. That it kind of defeats the purpose from a economy perspective. And what will happen is the bootleggers, right, for lack of a better word, are the ones who are going to benefit. The other thing that we have to be mindful of that you don't see in other parts of the country is that we're just a drive away from other places. So I don't know whether it's illegal to drive, if it's illegal or not to drive to Massachusetts, if New Jersey has a legal cannabis thing and pick it up there. But if it, I'm not commenting one way or the other on that, but if people do that, then that's just another expansion of using the underground markets to be above ground underground markets to be able to leverage their use of cannabis. So I guess we'll ultimately wait to have to see how it plays out, but this is an emerging industry throughout the country. And I think New Jersey, should be, according to our members, New Jersey should be a leader in this area and not be one that's kind of looking on the outside in.
Agreed. Thank you. So before we shift into discussing some of our national issues impacting CPAs, I wanted to once again thank QuickFee for sponsoring today's program. And remember, if you have questions at any point during the broadcast, you can enter them in the questions box. So Election Day is fast approaching. The deadline to register to vote is October 13th. Ballots will be mailed to all New Jersey registered voters. Completed ballots can be returned now through November 3rd in one of three ways: by mail to a secure ballot drop box located in many towns, or to your county's Board of Elections. Or you can complete a provisional ballot at your regular polling place on November 3rd. See the link on your screen for the New Jersey Voter Information Portal, and most importantly, be sure to vote. We have some interesting Issues Watch podcast episodes coming up related to the election. As we approach Election Day, we'll be analyzing the presidential candidates' tax policies, and we'll also be taking a look at where things stand with the presidential and congressional races. And later in November, we'll have a post-election recap. For better or for worse, the Paycheck Protection Program has created a lot of work for many CPAs. Here's a quick update on the PPP from someone who's very familiar to anyone who reads our member open forum, the one and only Ed Zollars.
Well, the PPP loan program has had a few things happen recently. And the big issues as we sit here at this point in time is probably first, a lot of CPAs are trying to make decisions about when their clients should be applying for the loans. Right now, the GAO reported that less than 1% of those who took out PPP loans as of September 8th were reported to have actually had those loan forgiveness applications actually have made their way from the lender to the SBA by this point. So 99% of the loans are out there. And the feeling I'm getting from talking to other CPAs when I'm talking around the country on the issue is that most of those aren't sitting at lenders, they're just sitting at the individual businesses waiting for decisions to go out. There's a good reason to wait because we have a lot we still don't know and a lot that might happen. We have gotten some guidance a month ago on August 24th that was some useful guidance, but it was in specific areas. For instance, we found out about the fact that an owner would be somebody that was a 5% shareholder or more if it's a corporation. Although the SBA indicated that if you're talking about any other entity type, for instance, a partnership or an LLC operating as a partnership for tax purposes, that any ownership by a manager or a general partner would seem to be sufficient to put them in the owner category, which has very distinct limits on the amount of compensation that can count toward forgiveness. We also had a surprise, somewhat pleasant if you're the right entity type, of what we could do about payments for health care or for retirement plans. If you were a C corporation owner, the good news was we discovered that payments for your health care and payments for the retirement plan did not count against your cash compensation cap, which is $20,833 under the 24-week period. Rather, those are in addition to that number. Now, if you're an S corporation owner, the good news was only partial. Your health care is now considered part of cash compensation because the SBA views it, since it's in the W-2 in box 1, it's cash compensation. But you still get the retirement plan. Now, those who are sole proprietors, farmers operating a Schedule F, or those who are partners, they're still stuck in the code because they don't get credit separately for the health care payments, nor do they get credit separately for the amounts that are paid toward the retirement plans. The other negative surprise we had was that if you had a rental to a party that had any common ownership with the business that got the PPP loan, that rental would not be allowed as a forgivable expense, except to the extent that it was not more than the amount of mortgage interest being paid by the party, by the related party on that particular piece of property. So that means if you had a 2% owner that you were renting the building from, your rent would be capped at your share of the interest that they're paying mortgage interest on that building. So if you're using half the building, you'd get half the mortgage interest. And if that owner had actually paid off the mortgage, you're going to get nothing toward forgiveness for the rent you're paying. We also got one piece of good news there, though. We did find out that we could make use of the office and home deduction items. So our portion of mortgage interest and utilities toward the forgiveness amount based on what was allowed on 2019 return or what we expect to be allowed on 2020. We do still have questions open in a few areas. Key one is, how does applying early affect the limitations on the maximum compensation that can be counted? We're not supposed to get the ability for forgiveness for any employee like a rank and file non-owner if the compensation is more than an annualized $100,000. And while we're told that limit is, above $46,000, if we are going the full 24-week period, if we apply early, let's say after 12 weeks we paid out enough, we think, you're not going to get that full $46,000. You're going to get half the number for that shorter period, it would appear. The SBA hasn't said that for sure, but we suspect that's the problem. And then there's still the open issue of what will Congress do. The rumored amount of a full forgiveness for those whose loans are below a certain amount by just saying, I qualify for forgiveness, that's still floating out there. And will it be adopted? And that's a key reason, going back to the first point, well, it may make a lot of sense to delay applying for forgiveness because we're getting guidance out now. We're gaining some benefits by having the full 24 weeks run in most cases versus not having it run. And, you know, we might get a level of forgiveness and it may be at 150,000, it may be higher, but it may be much simpler than going through the what can be a very complicated process of actually getting the information together and applying for forgiveness for your PPP loan. So information continues to come about the loan program. It's still of interest, and I think we've got to take a look at the fact that we're going to be dealing with this program well into 2021.
That was a great update, but an awful lot to digest. Fortunately, Ed is teaching some upcoming CPE courses for us. The dates are on your screen. Before we hop into some more federal CARES Act stuff, we do have a New Jersey tax question that I wanted to ask Alan. When New Jersey residents are working from home, will it be possible to claim source income if employer resides in other states? I don't know if you can answer that, but
Well, I don't know if
throwing
I
it out
can.
there.
Yeah, unfortunately, I can't provide much of a definitive question. This is one of those areas that's still just very unclear. But we do know that the AICPA is trying to get some clarification, and we'll be hopefully rolling out some more information as soon as we get it. So that's the best that we can offer at this particular point in time.
Great.
Yeah, and as soon as that it comes out from AICPA, we'll have it posted on our website, and probably we'll do a webcast regarding it, so we can update our members on it.
Thank you. In addition to the PPP, there are other CARES Act updates and guidance that have been issued. Alan, can you tell us a little bit more about those and any other federal tax issues you're aware of?
Sure. So I just want to remind everybody, because PPP and the EIDL loans, took such precedent, even the rebates that taxpayers received, that got so much of the headlines, and everybody was focused on that. They forgot and failed to, at least these practitioners, we forgot that there are a whole lot of tax goodies in the CARES Act. And so I encourage everybody to go back and take a look at the summaries on those on the CARES Act, because many of this is going to impact our clients. So things like the NOL limitations have been changed. You now have the ability to carry forward to utilize a greater percentage of your NOLs, and you're able to actually carry back your NOLs and recover money for prior periods. They're also, under the Tax Cut and Jobs Act of 2017, there was a limitation on how much of your business losses you can use to offset your investment income and other income, wages and things of that nature. That has also been suspended for a period of time under the CARES Act. And so you can utilize those business losses to offset other ordinary income. There were limitations under the Tax Cut and Jobs Act, TCJA of 2017, on the ability to deduct interest. Those have been more liberalized under the CARES Act, something else to look forward to. Required minimum distributions have been suspended for 2020. So if you got clients or you are receiving retirement benefits, you are not required in 2020 to take your RMD. That is also a very favorable taxpayer item. There also was a clarification under the qualified improvement properties. There was a technical problem with the way that the TCJA was crafted, such that bonus depreciation was not allowed for certain properties that had lives of greater than, I think, 15 years or greater. And this was now corrected under the CARES Act, so something you're going to want to go back and take a look at. The last item I'll bring up is one that most people were aware of, and that was the suspension of payroll taxes. So first, for businesses, they had the ability to not make the Social Security portion of the payroll tax through the end of the year, and then pay that back in 2021 and 2022. So a lot of our clients are taking advantage of it, and frankly, many firms are also taking advantage of it in order to benefit from the additional liquidity. And then most recently, the president signed an executive order to defer taxes on individuals making approximately less than $100,000 a year, and having them defer their taxes. That is the employer makes that determination. Keep in mind, the employer will be held liable if the employee does not work for you anymore or doesn't have the ability to pay back those taxes. So what I'm seeing there is a lot of employers are going slow on that. It's not a forgiveness of the tax at this particular point in time, even though the president said he would work towards getting it forgiven. Right now, that is not the law. It's only a deferment of payment. Other tax news that's coming out. The IRS has issued some final regulations on 100% bonus depreciation, deductions for estates and non-grantor trusts. They provided final regulations on business interest expense deductions, and each of these are now more available. Each of these are more available to you if you click on the link that's below. The last thing that I want to touch on is the Affordable Care Act. So by way of background, most of you are aware that under the Affordable Care Act, there was this payment that was required. And particularly recently with the passing of Justice Ginsburg and the appointment of a new justice, with the courts being 6-3, there is the strong possibility now the Affordable Care Act could be struck down in its entirety, which means that all those taxes that were paid by our clients and ourselves may be no longer available, may in fact not have been a legitimate tax, which means they're available for refund. So what we need to do as practitioners ensures that we have protective elections, because many tax returns have been filed and the statute of limitations will expire for the period to claim a refund. So hopefully many of you have done it for those that were 415 filers, but we have an October 15th deadline coming up and many tax returns are filed on that date. Please go back and take a look and see which one of your clients, it may be significant enough such that if this act gets turned around, you'll be in a position to claim a refund and get their money back for you, for them, I should say, and for yourself as well.
Thanks, Alan. That was very helpful. Ralph, can you share some of the current happenings at the AICPA?
Sure. One of the things that says AICPA has been working on is a CPA.com initiative, which they've launched a domain so that CPA firms can register with .com. Here's a short video clip where in an interview with Tom Hood, who's my counterpart at the Maryland Association of CPAs, and Eric Arseson of CPA.com explains the program and the benefits for CPA firms.
So if I'm a CPA firm, tomhood.com, and I want to be .cpa, right? That's so tomhood.cpa. That's what that really means, right? So tell us more about what's the big benefit for the firms and ultimately even individual CPAs down the road about this.
Well, there's three key value drivers that we've been discussing. The first is what you've highlighted a couple of times is security. It's going to be a much more secure way for the firm to communicate with their client. Today, in this new digital world that we're all living in daily, there's increasing number of phishing and spoofing attacks occurring. And that is when someone tries to imitate a site and then sends an email acting as someone else and tries to create some type of, in most cases, some type of financial outcome. There's one that was very public where one of the Shark Tank members, Barbara Corcoran, her bookkeeper was sent a fictitious email that was a phishing spoofing attack, and that bookkeeper actually wired a couple $100,000. Fortunately, the bank did identify this as potential fraudulent activity and it was stopped. But this is how .com works. There's no verification on who is behind those websites. There is no management of the controls related to .com. .cpa, only licensed firms in this first phase, and going into 2021, licensed CPAs will be eligible, but we will be verifying that they are licensed and verifying their identity. And then secondly, there is going to be controls put in place around how we manage the overall .cpa domain. But the other two, value drivers of this new domain are just trust, that broader concept of trust with your clients, but then brand. Absolutely. We're fortunate that it's 3 letters, just like .com, .cpa.
Yeah.
So Tom, if it was your firm and, you know, hood.cpa or some other descriptor, hoodmaryland.cpa was the way you wanted to digitally represent yourself, that's going to work pretty well. You basically, when you're explaining to someone your URL, you're telling them who you are.
Yeah.
So we absolutely believe there's great branding opportunities.
Hi, the NJCPA encourages all New Jersey firms to consider registering a .cpa domain. Learn more and register at domains.cpa. In the interest of full disclosure, we want to let you know that the NJCPA has signed an agreement with the AICPA to help spread the word about .cpa. In exchange, we will receive $5 per domain for firms that list New Jersey as their primary address. Also, all state societies received 2 free .cpa domains. We have njcpa.cpa and nj.cpa. And now just a quick update from the AICPA regarding peer reviews. Reviews that were due January 1 to September 30th have been automatic 6-month extension. All 2020 peer reviews can be done remotely. Firms that delayed such should reschedule their peer review ASAP.
Oh, yeah. Welcome back. Sorry. Ralph and Alan, as leaders and AICPA council members, you're seeing firsthand the changes that are occurring in the accounting profession, both locally and across the country. What are some of the trends you're seeing?
So, Teresa, predating the pandemic, we've been seeing a decline in how many accounting grads were being hired by CPA firms. In large part, they're hiring other disciplines. So we're becoming much more multidiscipline type of practice, and it's declined by nearly 30% in the recent years for accounting grads within there. Also, pre-pandemic, accounting firms were seeing increases in their fees and income per partner, all positive trends for our industry. And in terms of the pandemic, in recent AICPA survey of CEOs, CFOs, and controllers, 82% said their companies will not be reducing office space in the coming year. Half of the respondents said they plan to return to traditional on-site operations, and 22% said they plan primarily remote operations over the next 12 months. The survey also showed that hiring plans are expected to be flat over the next 12 months.
Wow. So we've covered a lot of ground today, but as I mentioned at the beginning of the program, the pandemic has had an effect on almost everything, including the NJCPA. Alan, your term as president began during the pandemic and has been very different from other presidencies. Can you share some of the steps you and our other leaders have taken to adjust to this new normal?
Well, Teresa, it's definitely been an interesting time for sure. But, you know, the good news is that in recent years, our society's leadership has recognized the need to undergo a digital transformation. A digital transformation. And several years ago, the board approved a new strategic plan that set forth 4 broad strategic initiatives to help the society evolve and serve members today and into the future. Because of that groundwork, the society was able to convert almost seamlessly to providing valuable information and programs to the members in a fully virtual environment when the pandemic started. But at the same time, we understand there are still some member groups that feel underserved. So the board has set a priority to engage more of these groups. We're working to gain a better understanding of what they want and what they need from their professional association. So more to come on that soon, but if you have any thoughts, please send them to feedback@njcpa.org at any time. And please know that no idea is too big or too small. If you have an idea, let us know. There are several members who have come up with great ideas over the last couple of years, and it's their leadership in those areas that have maintained change. And I can speak of 2 of our members in particular, Melissa Melissa Dardani and Zach Cohn identified that we have a need with our members who are struggling with student loan debt, and to address that larger problem in our state as a general basis. So we formed a task force, and legislation is being drafted by New Jersey, and a student loan debt lottery is launching this year from our scholarship fund and things like that are made available. Ralph, how is that lottery going to work?
Well, we know that many of our new NJCPA members accumulated significant, student loan debt on their way to become CPAs. With our new student loan debt lottery, 10 NJCPA fellow members will each receive $1,200 towards their student loan debt. That's our way of helping our members out. Entries will be accepted during the month of November, and we'll send information about this to members in late October. And we have a few more programs that we've instituted to help members. Membership Plus was launched this year. It provides 20 free web-based CPE credits per year to all our members from a designated slate of programs. To address the lack of chapter season passes this year, we launched a virtual CPE pass. For only $239, members can get 24 credits via 8 webinars. Already more than 600 members have taken advantage of this offer. As with all of our CPE programs, all of our conferences have been converted to virtual this year because of the pandemic. And we have 3 new events coming up. The Emerging Technologies Conference is a half-day event on October 27th. It's going to cover blockchain, cryptocurrency, data analytics, robotic process automation, and more. Boy, that's a mouthful. In conjunction with the Pennsylvania Institute of CPAs, we're offering a Women's Leadership Conference on October 27th. In conjunction with the California and Colorado CPA societies, NJCPA members can attend the National Cannabis Business Symposium taking place October 26th and 27th. You can learn more about these programs at the link on your screen. It really speaks to the collaboration that we're having, not just here in New Jersey, but with our counterparts across the country.
Yes, thanks, Ralph. Before we continue, I just want to let you know that we have reached our 1-hour time for this program. So you're qualified for full CPE credit, but we do have a few more topics we'd like to go through and a couple more questions we'd like to answer. So you're welcome to stay on. So every year, the NJCPA members visit their local high schools to discuss the accounting professions. This year, more than ever, it's important to enrich a student's learning experience. We encourage all of our members to consider making a high school career awareness presentation virtually. The sign-up page will be open soon at njcpa.org/careers, I believe is it. As it says, members can work with educators to set up a presentation date, and we'll provide you with a script and slide deck. It's a really rewarding experience. The NJCPA Scholarship Fund will also be opening applications shortly for 1-year $1,500 scholarships for high school seniors planning to major in accounting, and 1-year $6,500 scholarships for New Jersey college juniors and seniors majoring in accounting. Throughout the month of October, we'll be accepting entries from NJCPA student and candidate members for our CPA exam fee lottery. 10 winners will receive $750 each toward the cost of CPA exam fees. Ralph?
Yeah, one other thing that we've done recently is that the Society created a diversity and inclusion task force this past summer. Displayed on your screen is the Society's recently revised diversity statement, which the task force helped to update, and the statement was just approved by the NJCPA board. The task force will be working to identify programs and initiatives to help foster a diverse and inclusive environment for NJCPA members and the companies and organizations they work for. See the link on your screen for 2 upcoming webinars on diversity and inclusion presented in conjunction with the Ohio Society of CPAs.
And Ralph, if I can just add to that, the profession, our profession is, we're underserving this minority community. And it is an imperative that the society steps up. And I'm really appreciative of your leadership and the leadership before us to see that we take the mantle and we grow it, and we make our profession as inclusive as we possibly can be. It's good for business, and it's good for us, and it's good for society. So thank you for that, Ralph.
Well, thank you, Alan. And I think you hit a very good point there. It's all business driven with the current trends that are going to be taking place. It's an imperative that we make sure that we reach out to that underserved minority community and encourage them to consider becoming CPAs. And in order to do that, we need to make sure that we have an environment and a culture that is welcoming and inclusive.
Exactly.
Before we wrap up, I have 2 COVID-19 related questions. The first is, for employees who had to work from home for 6 months and incurred additional expenses, will there be tax relief for 2020? Do either of you want to field this?
Well, good question. I'm sure that may be something that may come up in the legislature, but right now we haven't heard anything about that. But I do suspect that it will be. I think on a national level, I have heard some rumblings through AICPA about that. So we'll just have to wait and see what rolls out on that. And certainly once we do have information, we'll be able to post it on our website and get it out to our members for their consideration.
Great.
And Teresa, keep in mind that employee business expenses are no longer deductible under the 2017 Act. So it would require legislation beyond just deducting the expenses. It would require legislation to now allow those deductions. So
great point.
We can't get Congress to agree on anything these days. So I'm not optimistic.
No. Here's another question. For parents who opt to do homeschooling, what costs can be recovered for setting up the homeschool, like a learning pod, for example?
I'm not sure that there's anything that exists currently. It's possible you could argue that if you're homeschooling, you are entitled to the $250 deduction for teachers to buy supplies. But beyond that, I can't think of anything that would be available to that, short again of Congress and/or New Jersey creating legislation that will ultimately allow a deduction for that.
Thanks. We have a couple more questions, believe it or not, they keep coming in. Is there any update on the mail backlog with the IRS? There have been tax returns mailed certified back in March that have yet to be processed.
I know AICPA has been, working on that, but I don't think there's a solution has been created. I think what they've been doing is investigating that. I do know that they have approached the IRS because with regard to certain filings not being processed and missing deadlines, I think that's one of the issues that they're attempting to resolve for our members in the profession.
And I will, as a practitioner, we're getting a lot of phone calls. What should I be doing? Should I be contacting the IRS? We have tried to get through the IRS on a couple occasions. It's very difficult to get through to them. I can tell you that my personal estimated tax check for September was cashed very quickly. So it's definitely, there are trailers, multiple trailers sitting somewhere where there's just a backlog of data it will get in. And you can only hope that they'll be very reasonable. And I think most people are probably aware, the IRS did suspend sending notices out on underpayments because, which was causing a whole lot of activity and anguish by our clients and by us because we have to deal with them.
Great, thanks. Well, we're going to wrap it up now. This concludes our edition of Issues Watch. If you have a colleague who missed the program, we will be rebroadcasting it twice for CPE credit on October 5th and 7th. In the meantime, check njcpa.org, NJCPA Pulse, and the open forum for updates on all of the topics we discussed today. And thanks once again to our sponsor for today's program, QuickFee.
And Teresa, I believe if there were questions that haven't been answered, that we will answer them later
Sure.
For individuals and post them, I think, on our website, if memory serves me correctly.
We'll probably just respond directly to the individual.
Directly. Okay.
Thanks.